Welcome to Money Talks with Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, former President Rodrigo Duterte is now in The Hague to face charges of crimes against humanity. A clarion call for governance as Philippine markets look for certainty following Duterte's arrest ahead of the midterm elections. As the country faces political uncertainty, can the Philippines continue to be an attractive destination for foreign investments? And U.S. stocks rise as U.S. inflation cools faster than forecast. The International Criminal Court has issued a statement following the arrest of former Philippine President Rodrigo Duterte. ICC prosecutor Karim Khan outlines the basis for the arrest warrant, citing Duterte's alleged role in extrajudicial killings in the country. Khan also emphasized that Duterte is entitled to due process.
The judges have found reasonable grounds to believe that Mr. Duterte has committed the crime of murder as the founder, as the head of the so-called Davao death squad, as the mayor of Davao City, and then later as the president of the Philippines between 2011 and 2019. It's important to underline as we now start a new stage of proceedings that Mr. Duterte is presumed innocent. He will make his initial appearance before the court soon. And the focus of the office is on the judicial proceedings and on proving its case before the judges of the International Criminal Court.
Duterte arrived at Rotterdam Airport on a chartered flight just before midnight Manila time. He is expected to appear before an ICC judge in The Hague in the coming days. For now, he will be taken to the ICC detention facility in Ševenik, where he will also join Kosovo's former president Hashim Thaçi, Bosnian Serb war criminal Ratko Mladic, and other militia leaders from Sudan, Mali, and the Central African Republic. Upon arrival, Duterte is likely to undergo a medical examination. If the case proceeds to trial, he could become the first former Asian head of state to stand trial at the ICC. On his way to The Hague, he addressed his arrest, linking it to his past directives on law enforcement.
For all of the whatever happened in the past, ako na yung nag-front sa ating law enforcement pati military. Sinabi ko na, I will protect you and I will, ako ang managot sa lahat. This will be a long legal proceedings. But I say to you, I will continue to serve my country, and so be it. Kung ganun na, destiny ko.
UP Professor Aris Arugay told me on this same program 24 hours ago that Duterte's arrest seems to be on track to becoming a key electoral issue. Let's hear that.
The last time a popular former president got arrested, which was former President Joseph Estrada, it resulted in People Power 3. It resulted with what I call a lost decade for Philippine democracy. From 2001 to 2010, we really didn't move the needle in terms of political stability and economic development. So I do think that that prospect is still there, given that the Duterte still has a lot of following, a lot of support. We see this in social media. There's already some groundswell of popular mobilization in Davao that could reverberate to other urban centers of the country, including Manila.
With us now for more, live from Jakarta is Jayant Menon, Senior Fellow at ICAS Yusof Ishak Institute. So good to see you, Jay. Thank you so much for joining us.
Thank you, Cathy. Good morning to you and all your viewers.
So, how are you seeing everything from where you are, how things are unfolding here in the Philippines? You've heard from Professor Arugay there saying we have yet to see whether all this translates to political instability. And I know that you've lived and worked here whilst with the ADB and have observed firsthand how such political developments go.
Right, yes, I have. I've lived in the Philippines for 20 years, longer than any other country, actually. And so looking at it now from a bit of a distance, I guess certainly it's concerning. This is, almost an unprecedented event. And from, Aris has already very nicely described the political consequences. From an economic point of view, I guess this will undoubtedly affect the so-called political risk premium that investors, compute and look at when they have to make decisions about their portfolio and direct investments. The question really is how much of an impact will it have? It's early days. We'll have to wait and see what kind of domestic response evolves with the midterm elections and so on. But I think at this stage, it's safe to say economically, it's unlikely to be a big factor.
But
The
it
Philippines
is
is a
the
country-
political risk premium that you did mention there. How could it go both ways then? What would you be looking for as the catalyst for either scenarios?
Right. On the political risk, though, I think we have to recognize, the Philippines is a country which has had to endure a lot of political instability in the past. So it's not anything new. If it were to happen, say, in Singapore, where I work, it would be a big factor, right? It would be unexpected, and it could change things. I think in the Philippines, there is some built-in resilience because of, ongoing uncertainties on the political front and the economic front, and this can sometimes be a plus. Investors have already built that in, so it'll be a slight deviation from what they're usually expecting, and so the impacts are likely to be muted as a result.
So given that resilience that you mentioned, how do we now compare with our fellow ASEAN neighbors? Are we any less or more attractive as an investment destination following the developments over the last 48 hours?
I guess economically there might be a small negative impact, but what I would like to stress here is that there are much bigger, challenges facing the Philippines in the investment front. You've got, rising neighbors like Vietnam, Indonesia, Cambodia that now compete with the Philippines. You've got a lot of mega trends taking place. There's climate change effects, technological disruptions, rising protectionism. All of these things are weighty and much bigger than the type of political changes we've just seen in the last 48 hours.
As a final point, Jay, what do you think is the edge that the Philippines has given the developments?
I think the Philippines, is currently set to grow very rapidly. I think that will continue. There are lots of opportunities coming out of this disruption, right? I mean, there's been a lot of reconfiguration of supply chains taking place with the US-China trade war and now rising global uncertainties on protection. So far, the Philippines hasn't taken too much advantage of this, but I think with increased investments in infrastructure taking place, reducing costs, that can change. And hopefully this little political blip won't cut into that positive scenario, but the economic changes taking place with investments in infrastructure especially, I think bode well for the immediate future for the Philippines.
Thank you so much, Jay, and for letting us see beyond all the noise that we're seeing here, that silver lining we so need. Giant Menon of ICAS, Yusof Ishak Institute, joining us live from Jakarta.
Thank you, Cathy.
Yes, served as guest speaker at the Management Association of the Philippines economic briefing yesterday, where he talked about it's all about governance and curiously punctuated that with an exclamation point, as you can see on his presentation deck. Later on, with us now live in the studio is former Deputy Governor of the Bangko Sentral ng Pilipinas and currently country analyst of Global Source Partners, Diwa Ginigundo. So good to see you, Diwa. Thank you so much.
Oh, thank you very much
here.
for having me here, Cathy.
Yes, and at a very critical time,
Yeah.
and a presentation that came through just 24 hours before Duterte boarded that plane to Dubai and then to Hague.
Well, we
Was
are
that-
in a very interesting time.
It is, but was it a bit of a pickle that you had to maybe change your presentation around governance, or did you just leave it as is? Your
Well,
narrative
I
stayed the
made
same.
some kind of mention about the recent arrest of the president and detention at this. I think at this point he will now be detained. That is part of the risks that I mentioned as part two, part of the breakup between the president and the vice president. In other words, the Marcos camp and the Duterte camp. And probably that could be considered part of the risk.
It is the political risk premium that
That's right.
Jay was just speaking
Yes.
of earlier. So really it's a clash between two dynastic clans.
That's right.
Coming into the midterm elections with impact towards the 2028
That's right.
presidential elections.
Yeah.
So what are the risks?
Well, I agree with Jay that the impact could be insignificant, but it will also depend on how both camps will react to this latest development, the arrest and detention of the former president. It will depend on how mass actions in opposition to this arrest and detention of the former president. But already some news have been out that there were attempts in Mindanao to gather together a crowd in opposition to this recent development. But I think they failed to gather a crowd that is sizable enough to make a difference. So in other words, it looks like, yes, there were developments that could upset the financial markets, but not too significant. In other words, we have seen this before. This is something that is not unfamiliar with us, okay, and therefore the market could simply build this into their risk premium, political risk premium, and over time, I think the market can recover. This is something that we have seen before.
We have, but in
Yes.
terms of governance, we're seeing something different here because in a conversation I had on open government partnerships with
Yes.
Budget Secretary Amena Pangandaman, she did make a mention of the importance of civil society.
Yes.
Going out there and partnering with government to
Yeah.
make things work. What do you think the civil society needs to do now to make that difference and not, be back in this vicious cycle that we've seen with governance past?
I think we need a critical civil society, okay? A civil society that is capable of, or shall we say, critical thinking, okay? That civil society which has the capacity to screen out and discern between actual political noise and the noise that can disturb markets and upset economic growth. I don't think we can overemphasize the importance of public and private sector partnership, okay? Not just in terms of infrastructure, but in terms of engagement at all levels of governance, both at the national and the local levels of governance. Yes, it's important, but we have to make sure that governance remains in good hands and is done based on established rules and protocols.
Well, let's put governance to a test. Do
Yeah.
you think Duterte's arrest is a sign of governance?
Well, it is an adherence to our international agreement. While we are no longer a member of the ICC, the so-called crime against humanity were perpetrated during the time of his incumbency. We are also member of the International Police Organization, or the Interpol. And for this reason, I think the government cooperated and supported the arrest warrant. And now the former president is in The Hague. So this is something I think that actually reflects adherence to accountability, and I think that will help end this culture of impunity in the Philippines.
Well, what do you make of the view that the government's institutions are weak and not strong enough that the ICC has to intervene in a country's affairs?
I agree. I agree that some institutions of government are weak. Remember that during the 6 years of the president, there were only very few police officers who were arrested and convicted for the crimes. Even today, I think it is quite clear from the Rome Statute that established the ICC that the judicial process in the ICC is complementary to the national system of justice, and therefore, when the government decided to cooperate and assist in the prosecution of the president, I think this is adherence to rule of law. This is adherence to justice. And for that reason, I think we have a good future ahead of us,
So
Cathy.
how then
if
do
we
you
continue to do
connect the dots for us? If you were a foreign investor, what do you tell them that it's safe or even safer to do business in the Philippines?
Well, of course, foreign investors in the Philippines have raised the issue of adherence to law, rule of law, consistency of public policy. But I think the recent development shows that the government is also capable of providing or demonstrating its adherence to the rule of law, accountability, and of course to conclude that culture of impunity in the Philippines. The Philippines has more to show other than this issue of this political issue.
It does, and it doesn't stop at accountability. All the basics that maybe even Vietnam, Cambodia have. That's
Well,
why
we have
they're growing faster than
each
the
country
Philippines.
has its own share of
It does.
weaknesses. And,
But what are our strengths then? I mean, we're hoping to be middle income.
well, number one, we have the
economy.
demographic advantage. Okay, we have a young population. Second, we have good natural endowments. Third, we have I think we have established a system of infrastructure. The institutions are functioning, so to speak, and therefore, from 1999 until 2019, we have been able to sustain a uninterrupted growth of from 1999 to 2019, except for the 2020 when we experienced a deep recession of 9.5%. But after that, I think we have been able to recover. But my point in my presentation is that we need to grow more, okay? Because of the
But how much
economic
more then
scarring.
for middle income
9%,
economy?
okay?
Until
For the
2026.
higher middle income economy, I think we need to grow to $4,500. That's per capita.
Well, the World
Okay.
Bank is holding out for 2026. Is that something we can do?
I'm not sure if we can only grow by between 6 to 8%. I think we need to grow more because
Okay.
every time the World Bank, because the World Bank also adjusts the standard for an upper middle income, and right now we are still in the lower middle income category for the last 37 years.
All right. Well, I'm
So
going
we need
hold
to
you
do more.
to 9%. That's a lot to do more. Thank you so much. And really nice that you came
Okay.
out of retirement. That's the last
Okay.
time we talked, wasn't it?
Yeah.
2019.
Thank you very much,
Thank
Cathy.
you. Digidiwa Gundo, the former deputy governor of the Bangko Sentral. And you're watching Money Talks in One News. U.S. inflation comes lower than forecast, pulling U.S. stocks up. And Metro Pacific Tollways Corporation achieves a record of over 23 billion pesos of consolidated core net income for 2024. We have details after the break. Stay with us. Welcome back to Money Talks. I'm Cathy Yang. The 25% U.S. tariffs on steel and aluminum imports are now in effect. One of the industries to be greatly affected by Trump's order is automakers. Research from Barclays shows the cost of building a car in America would inflate by about $400 US. Most automakers import aluminum that are used in the vehicle's outer bodies, and there are few domestic alternatives. Canada is the biggest exporter of aluminum in the U.S., accounting for 75% of the material consumed by the U.S. In response to the metal tariffs, Europe and Canada announced retaliatory duties against the U.S. The European Union will place a 50% tariff on U.S. imports, such as whiskey, motorbikes, cranberries, garden umbrellas, and tablecloths starting April 1st. A second set of levies will take effect on April 13 on goods ranging from poultry and beef to white chocolate and chewing gum. Meanwhile, starting Thursday, Canada will put 25% tariffs on an additional $20 billion US in imported goods, from computers to sports equipment. EU Commission President Ursula von der Leyen says the bloc's doors are open for talks to avoid a trade war.
Our countermeasures will be introduced in 2 steps, starting with April 1st and fully in place as of April 13th. In the meantime, we will always remain open to negotiations. We firmly believe that in a world fraught with geo-economic and political uncertainties, it is not in our common interest to burden our economies with such tariffs.
At the White House, Trump vows to impose retaliatory tariffs against the EU. Speaking beside the Prime Minister of Ireland, a member of the bloc, Trump repeated his claim that the EU took advantage of the U.S. for years.
The European Union treats us very badly. They have for years. I saw that. I had it out with them in my first term. But European Union's been very tough. And it's our turn, too. You know, we get a turn at that also, but they have not been fair. And as you know, we're going to be doing reciprocal tariffs. So whatever they charge us, we're charging them. Nobody can complain about that.
U.S. inflation cools to 2.8% in February, but the lower-than-expected figures would not allay fears due to tariff uncertainties. Economists expected the inflation print at 2.9%. Core inflation, or prices excluding food and energy categories, slows to 3.1%, the lowest year-over-year reading since 2021. Wall Street remains anxious by U.S. President Trump's tariff orders, despite encouraging inflation figures. Consumer sentiment already fell in February by 10%, while consumer spending in January dropped to its steepest in 4 years. Analysts expect the inflation report won't push the Federal Reserve to ease rates when the board meets next week. Muted inflation pushed the U.S. markets to rise in yesterday's session. S&P 500 up by 0.5%. Tech-heavy Nasdaq climbed by about 1.25%. Both indexes were on the decline in previous days because of the global trade tensions. Meanwhile, the Dow is down by 0.2%. As for U.S. futures, they've indicated that the 3 markets will open up when they open Thursday morning local time in New York. That's tonight Manila time. The Dow, the S&P, and the Nasdaq are up by about 0.1%. And here in Asia, the markets are up in the first hours of trading in light of the U.S. report. Australia's ASX 200 rises by 0.3%. South Korea's Kospi up 0.7%. And Japan's Nikkei 225 picks up 1.25% at the open. Elsewhere in Asia, investors are watching Indian markets after India reported a lower-than-forecast inflation rate of 3.6% in February. And closer to home here in the Philippines, let's take a look at the PSEI and see how that's opened at the get-go. It is up at 6,213 after the close of 6,195. So we're just bouncing up there above the 6,200 level. The local stock market closed Wednesday down by nearly 0.2%. And let's take a look at the peso. Looks like it's opened a tad weaker. At 57.39 to the dollar, the peso ended Wednesday trading weaker than the dollar at 57.36. Fitch upgrades the viability of ratings of 5 Philippine banks, namely BPI, BDO, Development Bank of the Philippines, Land Bank of the Philippines, and Metrobank. With us now for more live from Singapore is the Director of Fitch Ratings Financial Institutions, Tama Febrian. Good to have you with us, Tama. Welcome to the program.
Hi, good to be here, Cathy.
Well, it's certainly good news amid all the uncertainty, though consistent with the improving Philippine sovereign credit ratings in recent years. What were the reasons and the metrics for the upgrades?
Yeah, so what drives the upgrade on the bank standalone ratings is driven by our more positive assessment of the banking system operating environment. And this takes into considerations the country's strong economic growth prospects, with GDP expected to rebound closer to 6% over the next 2 years. And we also take into consideration the resiliency of the bank borrowers, as well as the bank-owned credit standards, which should keep impairment risks relatively manageable over the next 12 to 18 months. So I think this supportive economic condition will continue to bode well for loan demand as well, where we would project the loan growth to be relatively brisk, at 12 to 13%. And profitability should also stay whole, given the prospect of a shallower and a slower rate cuts, which would be positive for the bank margin. So all in all, it's really us trying to recognize some of these improvements and also the relatively good prospects of the banking system.
Right, certainly some good news there, but how come Fitch's credit ratings are the lowest for the Philippine sovereign government when you compare that with Moody's and S&P? Because Fitch is at BBB minus and Moody's is at a notch above the minimum investment grade, or a notch higher than Fitch, versus S&P, which is a BBB plus, or 2 notches higher.
Yeah, so I can't really comment on the sovereign rating, nor can I comment about the other rating agency methodology. But what I can say is that we believe that the recent upgrade on the standalone credit ratings is what will make it a little bit more consistent with what we have rated with for the bank peers in the regions. No doubt there's a lot of structural improvements in terms of profitability as well as the capital buffer since the pandemic levels. But I mean, if you take a look and compare with some of the larger peers in Indonesia and also some of the leading ones in Thailand, I think the Philippines still got quite a bit of a catch up in terms of profitability and capitalization. So, but this is not to say that there's no prospects for further upgrade over the medium term. No, if things continue to they continue to do well and they can actually do better, then of course they will create upward revisions in their standalone credit ratings.
All right, well, we hear you. Thank you so much, Tama. Such great news to end the show. Tama Febrian of Fitch Ratings in Singapore. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. Have a great day ahead.